The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach, dear friends, do we go? We'd like to meet pretty much at this time every day.
The following takes place between 2 p.m. and 3 p.m.
And what do we have going on? I don't know. Something stuck. I don't know why it does this sometimes, but it does. You have to move everything around, it seems like. What else do we have going on out here? Well, the markets tried to push higher today. That 2140 level has been my line in the sand, and not a Obama line in the sand that he just erases and then puts another line in the sand. That 2140 is acting very much like the 2165 level did for about 2 or 3 weeks, and that is that all the volume just shuts off. It's like a water faucet. Someone just went up there, pulled it off, or more, not a light switch. It takes a little bit of a turn to turn it off. It's not just on or off, but that 2140 and above volume is just very, very light, and we'll go to our hefty indicator. It is incredibly wimpy for what we actually needed to do, especially since we went to almost 2150 on the S&P cash and still can't crack 2 billion shares by the start of the show, which, of course, the start of the show is the yardstick for all things, isn't it? Anyway, we're at 2136. We were at 2149. It looks to me like we're probably going to close flat or a little bit down by the end of the day. But the bigger thing is these markets where it's 2 steps back, actually 3 steps back, 2 steps forward. And this is kind of a classic pullback in a market that's incredibly hard because, of course, you always want to get both sides of it if you're a day trader or trading in very small time frames. But it becomes incredibly problematic because it's just very easy to see these things fail and succeed at the highs and the lows. Everybody wants to buy the lows. No one wants to buy the highs. And you just have a lot of people throwing money at this market, hoping it goes higher, chasing cash, and that's always the most dangerous thing to be long in. But anyway, it looks to me like before the show's over, we're going to be at best flat on the S&P cash. I still suspect that we're going to go down to 2090. That's 2090 on the S&P cash before Friday's close a week from today into expiration. So what do we have? Light volume, a push today. There's a handful of stocks that are short, some at very high levels that I gave you a warning on. I will be able to give you one of those.
I informed you thusly.
Today I will. And that's kind of my job at least on the radio show. Calls, really my calls are reserved for the newsletter subscribers, although I'll give you my general ideas of how things are working out. But the radio show is kind of a bigger idea kind of thing, a broader paintbrush for me to think about what kind of news can I tell you today that'll actually hit CNBC Monday, Tuesday, or Wednesday, or even longer away. But if I can identify some trends, look at some charts, and maybe they're not going to happen today, but if they happen 3-5 days down the line, then I think I've done my job. And, of course, if I've helped just one of you, then I've done a horrible job. I should be helping all of you. I always hate those folks. If I could have just saved one kid. Well, you spent your whole life and all you wanted to do is save one kid. Well, you could have saved a ton of them. You're doing a horrible job. Get somebody to help you. Anyway, I don't know if there's anything else to say about that other than we'll start the show get going before the S&P gives up all of its gains for the day.
And it's all just a little bit of history repeating.
On this day in 1947, the U.S. Air Force captain, Chuck Yeager, becomes the first person to fly faster than the speed of sound. Yeager was born in West Virginia in 1923, was a combat fighter pilot during World War II, flew 64 missions over Europe. I met him when I was 8 years old. I have a picture with him on Hickam Air Force Base in Hawaii. I have no idea, really, recollection of it. Later in, I think it was 1987, I saw that he was coming around, grabbed the picture, and had him sign it. That is one of the few mementos that is in my safety deposit box. I don't want anything happening to that picture. He shot down 13 German planes and himself was shot down over France. He escaped capture with the assistance of the French underground. After the war, he was among several volunteers chosen to fly the experimental X-1 rocket plane built by Bell Aircraft to explore the possibility of supersonic flight. He also had 20/10 vision. He could see what 90% of people can see at 20 feet, what they can see at 10 feet. And I guess that's they all call in the Western days, he had an eagle eye, right? Well, he had an eagle eye, and that way he said that was the most important thing, shooting down those horrible Bosch. I guess the French called them Bosch. What do we call them? Not just Germans. I'm sure there's a detrimental name. And, of course, being politically correct, since my lineage is German, I can use it if I can remember what it is. I'll think of it soon enough. Not Borscht. Got to think of it. Anyway, what else is going on today? We got a lot of news happening. We're up still 2.5 points on the S&P cash. I have been thinking that maybe in the next day or two that there were issues that could easily force liquidation sales in many hedge funds. And, of course, they started pushing out this bit of news last night, and that's they're going to cut another 10,000 employees at Deutsche Bank. But all those European banks over the last couple of days looked very weak, and it didn't take long for most of the people in the EU and Germany to start trying to plug all the holes in the dike. Eventually, they'll run out of fingers, and the place will flood. But it certainly, I looked more and more at what was going on in Deutsche Bank in their charts and actually in some of the other news articles. And it does, I think it's a question of when. I don't think if, but a question of when these things take their next major flush down and wipe out many hedge funds that are stuck in these particular stock. Probably most notable will be Deutsche Bank. Getting rid of 10,000 employees is always a good deal to keep a boat from sinking. But that tells you just how tough things are in the Eurozone and Deutsche Bank. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Well, we're up 3 points on the S&P. Cash volume has just cracked 2 billion shares on the New York Consolidated Tape. I guess I'm a kraut. I couldn't remember that. Maybe I've blocked it out because there's a couple of things that will make me physically ill. And it's like vinegar, gin, and a couple other things that literally just the smell of them will make me sick to my stomach. And I don't know why. I guess I wouldn't be a good German, would I, if I didn't like sauerkraut? No, I don't like sauerkraut. I don't like that vinegar stuff. And whatever it is in gin, just the smell of it is enough to make me sick. But I must persevere. We all have our crosses to bear, don't we? I'll bear mine, well, avoiding sauerkraut and gin. What else is going on? It's a twit storm out there. Salesforce says that they are walking away from buying Twitter. I never understood them trying to buy it to begin with. I will tell you, though, that there is a couple of things that these things commonly mask, and that is many times if you're interested in a business, you think, hey, I might want to get into this business. What you do is kind of act and pretend like you want to buy it. You go in there, rifle through all the books, figure out how everything works, and then have a bunch of other people try to recreate it somewhere else on the cheap. And that is always the downside of dropping your drawers and letting all the other people walk by and take a look at it. You may not be doing well, but it may be a lot worse when you attract some flies around what's going on at your company, especially if it's leaking water as bad as Twitter did. I said in the den when someone posted this, to me, it was, why would you want to buy a boat that leaks all the time, which has been Twitter? They've had a couple of 2 or 3 years to figure out how to make money, still can't. And that's always problematic. I wasn't exactly sure if this was just a stunt to have a short squeeze in Twitter. It certainly could have been. It also could have been just a nice occasion for many people in Silicon Valley to go in there, dig through the books of Twitter, and see maybe if there is a business outside of it. But certainly everybody's kind of driven by. So I don't know if there's even, we'll look at Twitter maybe later in the day. But when you see people acting like they're going to buy a company, about half the time it's somebody just trying to do what they call in Silicon Valley a brain drain. Go in, talk to everybody, find out what's going on, find out how they think they're going to fix it, and then go back to your company. Maybe you can find some ways of applying what these guys are trying to do when they get the lifeboats out. But not one of my favorite people, the boss of Salesforce.com, has ruled out his company as a bidder. He's not bidding. What else is going on? This is how doves cry. We had a little higher market earlier in the morning, but there was a bucket of cold water tossed on that 2149 level of the S&P cash, and that was one of the former doves of the Fed came out and said he thinks that a rate hike seems appropriate now, since he was a dove that turned hawkish. His name is Rosengren. Says his views have not changed, but the economy has. So that's kind of, if you wanted to give a reason for the market floating over, I figured it was rolling over anyway. I wasn't giving a big chance of a close above 2140 on the S&P cash today. Just didn't seem likely, didn't seem prudent. But it is interesting nonetheless. But, we had a little bounce out here, about 130, about 130. That was Yellen yakking yet again. And she thought that maybe with the market coming down, she could run out and say, you know what, this market, we could let it run a little hot. We could let inflation go just a little bit higher. So it is kind of a two-faced thing. As soon as the market heads higher, they throw cold water on it. As soon as it heads lower, they're out there to throw a few crumbs to the bulls to make sure that they buy a few. This looks to me like the manipulation is all about trying to keep the market from going anywhere fast and letting the air out of the balloon as slow as possible. That's it. What else do we have going on? We have talked about Amazon. In fact, this is one of the things I will pat myself on the back for by saying already last week, you had a 7-day head start if you listen to this show, because
I informed you thusly.
Yes, I did. I told you that Amazon was seeing a huge amount of folks come in here at the top and short, that at 800 and some odd bucks, my thought was that this was not your average retail trader shorting an $850 stock. Those guys, like me, would buy puts. They wouldn't try to put 800 bucks out there so that they could make 70 or 80. Now, that's the kind of stuff that hedge funds do. Maybe they think they'll make 200 bucks. I opined last week in the Tech Insider, which is not out yet, by the way. I'm kind of slow. I've had a tough week out here with my mold spore allergies, and I didn't sleep at all last night. So you can read my Tech Insider today slowly because I didn't write it very fast. It'll be out in the 3 o'clock hour, I imagine, or 4 o'clock. Anyway, lot of shorts coming in to Amazon, as I said thusly. But it has hit one of the highest levels, at least in the dollar value, and that is $5.3 billion of total short interest now in Amazon. And the first time that number has eclipsed over $5 billion, according to the report. And I will slowly break my arm, patting myself on the back for picking that up well in advance of anybody out here.
I like Chinese. I like Chinese.
I like them. Unfortunately, they're not our savior anymore. The data released overnight on Wednesday, and a lot of what we kind of bounced around in yesterday indicated a 10% drop in the Chinese exports year over year last month. I've been looking at this as a problem since August, and that is a weakening Chinese economy. The question is, when does it become overwhelming? My guess is that you're going to see the first big drop come in the third world stocks and emerging markets. It was the worst in 7 months. I just didn't bring it up yesterday. But if you're wondering why we kind of had a bounce, I suspect yesterday and today, part of it was those numbers thinking that the Fed will not raise because China is weak. And I'm wondering just if Janet Yellen has maybe, what does she have, 10% credibility? And if they don't raise in December, they have 0% credibility? Or do they have like 0.5% credibility? Whatever it is, that is the question. Do they raise to save and make sure that they're not the Fed that cried wolf?
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're going to get into this. But, I'm still kind of a little shell-shocked from reading the news this morning. It's just beyond me to see what the government plan for healthcare did. And those poor farmers up in Iowa, and maybe you saw the article, their insurance for a family of 5 up there for the farmers was $40,000 a year plus a $13,000 deductible. Well, it sounded to me like the Affordable Care Act worked, didn't it? That sounds cheap. But if my first thought was, I started seeing that and seeing if it was truly an outlier, and there are a lot more people like that than anybody thought. The question is whether or not any of that stuff gets fixed. My guess is it does not before they start having to pay those rates come next year. But this is the year when people are actually going to get beaten horribly and their pocketbooks raped by the giant increases in health care from the Orwellian named Affordable Care Act. But you might check out those articles. But my thought is, man, if you wanted to cause a recession, just double the rates for health care this year. And, of course, they did such a great job with it that, of course, it is so affordable. And I will turn off my sarcasm now. The only thing was it was so predictable. And I don't know why people didn't want to figure out that it was kind of one of those ideas like we talk about with Mr. Musk. Oh, it's great. And kind of an idea sort of way. In practice, kind of horrible. Anyway, what else is going on out here? Let's look at it. 2138 on the S&P cash, closing in on 2.1 billion shares. So we may be back to Monday's volume by the end of the day. That would mean, I don't know, 2.8. I got a cough. And, that'd be about maybe 2.8 billion shares today. Going into a Friday would not be a deal. A close over 2140 would be a little bit more bullish, but this bounce mostly given back and on the kind of volume that we had set on Monday, I don't see how you could make that bullish at all. As we've been tracking, and I've said for the last maybe 3 weeks now, or is it 3 weeks or 4 weeks? The most important chart to be looking at these days is the TLT. Not in that I'm trading it. I am assuming that everything out here is following it. We've got a little bit of a hammer out here. This is the area where we do have some fairly decent support. I've been thinking that we would break it, that we only got a one-day bounce out of this support area. Tells me that there may be a lot more going on in the bond market in the near future. I've been saying the 1-to-1 ABC is 128.59. I suspect that we are still headed for that. Now, we've got the kind of volume that matches the June 23rd low. Unfortunately, we don't have the kind of volume that matches the September 15th low, but you don't always get it. One of the reasons why I thought that we weren't going to get much of a bounce and we're going to head to that 128 area is the actual energy off that September 15th low to the September 28th high and then back down again. It picked up by about 15%, maybe 20% off that September 28th high. And at best, you can hope for a consolidation. Worst, it just goes ahead and breaks that. But my target has not changed. It may bounce around here a little bit more. We might have a little bit more digestion of this price in the congestion zone. But I'm still looking at that 128.59 as the target for the TLT. Of course, you could say that the dollar index did help it a bit. We're up 35 cents. My guess is that we are not going to get a retrace, or at least my speculation is that we will not get a very large retrace in the dollar. And I think we could easily gap up and hit 100 on the dollar index next week. And it may be a little bit more of these doves turning to hawks in the Fed. Whether or not they actually do it may be a completely different story. But a combination of higher dollar rates next week and some stocks that I suspect are going to whiff on earnings, especially, and then blame the dollar, we'll probably get a meme going on in the markets to actually push that. You can give me a call at 877-927-6648. And I got an email here. He wants to know, he's long the IBB. I have a long position about 3 to 4% down, and wondering if you are looking for a bounce to get out or cut my losses. Well, I'm on the opposite side of that trade. So I would tell you that I'm still looking for lower in the IBB. But maybe you get lucky, maybe you don't. I didn't see anything that would have ever got you to buy the IBB. In fact, we can bring that up. We've got light volume today. This may be the first support level around here. But my guess is that other than expiration next week, there is not a lot to support this market in the IBB. And it could, you got some light volume today. We'll see how this thing closes. But I think there's probably an 80-85% chance we hit that 240 to 245 area from this gap back up and an untested low at 240. And of course, the more people scream that the election's already over and we don't need to have it, need to listen to the polls, probably feeds into a lower IBB. But these may come down with the kind of energy. Now, the other thing is the energy off this 301.80 top was huge. Another reason why I would not have been long. On my power law vector indicator number, the June 27th low to that September 23rd high had a 2.4. We've only come back about 50% of the way already, and I have the energy on my power law vector indicator that's almost as much as that entire long-term move up. So we've already come off. We've come off with some decent energy, and the move down. I don't see a lot else out here happening other than maybe some temporary support next week for options expiration. It may just go sideways for a week. You may get lucky and get a bounce and get out, but there was absolutely nothing in the IBB that I thought had any social redeeming value to go long. I just don't understand the long part of it. Maybe you can email me and tell me what you thought you saw in the IBB. I just wouldn't see it. And again, oh, rats. Did I do that? I did do something horrible. Hang on, I deleted a bad email. Or it wasn't a bad email. I deleted an email I needed. Now maybe someone will send it back. We'll be back after this short timeout.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And there's a few stocks worth taking a look at. One of the high flyers, I was hoping the energy on Glue Mobile, GLUU, this energy would come out on the July 19th high down to the low today. It is a whole lot less than the energy up from the June 28th low to that July 19th high at $2.95. Energy's off by about a fourth on the way back down, which is exactly what you want to see. The last low came in with 2.4 million shares, though. We got 3.7 million shares. I just don't have any real decent signals out here that tell me that even some of these things that look like they're done going down are ready to go up. And that kind of feeds back into my belief that we have a market top in place. Halliburton wanted to see how this thing did today. Tried to drive it up a little higher, not enough volume, 5.44 million shares. You need 15. So we're going to come in at about probably a little less than half of the volume of the original peak June 8th high that had 15 million shares at 46.69. So you have to take a look at that. JBL, this thing's back kind of in this area that should be support. Maybe it just doesn't look exactly. Coors, Michael Coors, not the Coors from Colorado. Watching some of these retail stocks, would have liked to seen the volume actually come in a little lighter October 13th. Again, there's a lot of double gaps out in this market. I would not be buying these things until they hit that. In that case, it's $43.50. So still need to back into this thing. The volume, this wouldn't be one that I would be shorting, but I'm still waiting for a pullback and some pushes down before I would consider going long. What else do we have out here? Cronus Worldwide. This thing went higher and came back in. Kratos Defense and Security Solutions. Say had a nice gap up with some energy. It's back to it now. That gap happened on the 15th of August with 1.8 million shares. Unfortunately, they had 1.8 million shares. So this one, the tie goes to the runner. The one thing I really do like about this one so far is very light volume off the top from that August 25th high. Let's take a look at the profile on this guy real quick just to make sure, because I haven't had a chance to go through it. I will this weekend. This company provides mission-critical product solutions and primary services for the government and commercial customers. 3 segments: government solutions, unmanned systems, public safety and security. Offers microwave, electronic products, satellite communications, technical training, modular defense systems, rocket support services. If they don't do it, you don't need it, I guess. A lot of government contracts, it looks like. Pretty close to Tijuana. Anyway, what do we have out here? This did come back. I do kind of like this. You've got a pretty decent and well risk reward, but again, kind of tough to be very bullish on this market right now. You can also give me an email at email at path@tfnn.com. Did I close my email? Why did I close my email? By accident. That was another bad thing I did. What else do we have? And I was very interested in some comments in the den last night during Andy Heck's show. There's some decent thinking about geopolitical events, but I tend to be very interested in how Lockheed Martin is moving, if there is going to be a lot of military action in the near future. It certainly doesn't look like this chart is giving a lot of that. Energy was slightly more from the September 26th high to the low that we had yesterday compared to the low of September 12th up to that September 26th high. You came off with some decent energy on this. You know, the buy point on this, if we are going to have some kind of brouhaha over in Europe, is this gap, and that gap comes in at about 227. It occurred back on April 26th. If you want to go back and look at that, you know, there's some things that you could get into for geopolitical risk. Just maybe was overpriced to begin with. But one of the stocks that I love, they are working on a great many things: fusion energy, water supplies for the world. They're working on some big ideas outside of traditional security, airplanes, missiles, that kind of stuff. They're working on some bigger stuff. Nothing's really come out from these guys yet, but the best and the brightest working on it. But I don't know if that chart would confirm to me, at least right now, that there is any military action that is come out. Some of these stocks just were going up on ridiculous moves, have come off now with ridiculously large volume. Mercado Libre, which is kind of a PayPal for South America, down on fairly significant and heavy volume yesterday, still having that same kind of super heavy volume out here. But if you're looking for a chart that came off the highs with juice, certainly you can look at this one. And again, my thoughts are that now that the TLT and the dollar are starting to move, it's going to be these stocks, third world kind of stocks like Mealy, that have the super hard breaks off these highs. It's kind of tough to see. They drove this stock up that looked fairly horrible at the bottom. I think I was short at this stock at one time, and I think lost like $2 on it, which was what, 0.5% or maybe 1% before I stopped out. We never really understood the idea of why this thing was going to the moon, other than maybe everybody loved the Olympic story over the summer, and maybe that's what drove this stock. I never really understood the idea of why this thing was going to be such a wonderful and huge stock, but it did become that. But of course, now it's time to pay the piper, and with some massive volume. Some stocks that are going sideways on light volume that are interesting to me. We've been kind of following this one for a while. Not too bad, this 1150, 1140 range out here in WP Limpster. And let's go ahead and take a look at what this company does. I don't know why I'm getting such... there we go. I've got to get rid of some spam here. Some people are sending me some emails. I'm getting spammed. I'm trying to keep up with it. There we go. That is not a spam. Not exactly sure why they're doing it. Oh, that's because it's in the trash. Okay. What was it doing in the trash there? Who knows? Washington Prime Group. Oh, we're going to the break now. Operates independently from Simon Property Group. Oh, yeah. Maybe there is hope for the malls this fall. At least keep an eye on this with Simon Property Group. Interesting. It's going sideways out here. Light volume, though. Be back in
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show heard daily here at TFNN.com. On Wednesday, October 19th at 5 p.m., I'll be hosting a special 1-hour event, Trading Range Boundary Lines, where I'll teach subscribers how to identify hidden support and resistance levels, the kind that you definitely need to be aware of for your trading and investing. You'll learn how to plot major horizontal support and resistance, how to identify breakouts and breakdowns, and how to project the next price move. These support and resistance levels work for stocks, ETFs, futures contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes October 19th's Trading Range Boundary webinar. Plus, if you sign up now, I'll include access to my 3 1-hour workshops, the ultimate trading signals, the ultimate reversal signals, and the long short line that every trader needs to know. This is an investment you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
I don't like spam! Spam, 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 spam,
spam. Wonderful spam. Wonderful spam.
Smokey just gave me a bear hug.
Yeah, we're starting to get that bear hug as we go into the close. This volume, I don't know if we're going to make 2.8 billion shares like we did Monday when the bond market was closed. This is, it's gotten worse, I think, almost every single day. That is the drop in this late afternoon move, maybe 10 minutes into it kind of is already declining. But the run rate between this 2:15 to 3 o'clock area is just falling apart. It's not like anything's happening out here at all for volume. We just have 2.2 billion shares on the NYSE with a couple of minutes, and Tom picking up the 3 o'clock the 3 to 4 o'clock hour today. This thing goes and closes red. I think we've got yet another huge sell signal in this market. And with the dollar moving, I talked to my Forex friend in Chicago today, and he says now the government's still throwing a lot of cash, trying to keep the dollar down. They may have just pushed and pushed and pushed, and maybe they've gotten to the point where they just don't think it's going to be worth the money to try to hold the dollar down. But it certainly looks to me like we're going to pop to about 100 and at least test that previous more recent high of 100 on the dollar index. And maybe that happens next week. But I certainly think it happens before we turn back down. 2135 on the S&P cash. What else do we have out here? Going to see a few other companies I wanted to see if I could get to before the end of the day. XBI, of course, which is the biotech index. We talked about the IBB. I just don't see anything exciting in that. I've got an email here. Let's try to get to that before the end of the day. Okay. Oh, what am I doing? It's in the newsletter, the daily newsletter, but we are short the IBB with the 295 puts. We got very good fill on those at about 6. Probably should be around. People should be in around 675. So we're getting pretty close to those things being about $30. So this may be my grand slam of the year on the IBB with I don't know, what is that? 500% move in the options on it. Should help us out. Maybe it gets to 240, maybe it doesn't, but I still suspect that we've got a lot more weakness in the IBB. The only thing is I probably didn't buy long enough puts. They expire next Friday. So I may have to get out of these a little bit before this thing hits 240. But they were just so cheap and relatively to a $300 stock. I mean, you're basically taking a $6.70 stop on a $300 vehicle. I mean, especially, if you're not if you've got a really good sign that this thing is ready to roll. And we kind of had to do it a couple of times. We actually are using these same 295 puts the time before, and I think it went to like 10 to I think we got into them or 10, $11, and they went to $20. But I knew that the big money was going to be sitting on these. I had to get out of them and then back into them yet again. But I think this is going to be my home run of the fall in this IBB. So we'll be keeping an eye on that. Anyway, that's about it. I don't know if there's a lot more to report other than the disgustingly low volume. Maybe yet another reversal signal in the S&Ps. Certainly a close below 2140 is very bearish for me. In the meantime, sell when you can, not when you have to. And we'll see you Monday. Same bat channel, same bat time. Hold on for Tom O'Brien.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.